Hello ladies and gentlemen, and here we are closing the week at 36, well into positive territory. If we have a look at the dailies, we started the week straight positive and we ended it up at the highest level, 36. Have a look here how the moving averages are turning, the lower moving average is turning, and very soon the difference is now 15 points between the first moving average and the second moving average, the 50-day and the 200-day. Spot price is well above it. I would have thought sometimes next week or the week after we get a buy signal and we will be in a period of risk on the dailies. So on the weeklies, we've had a 50 odd, 60, nearly 55 point improvement between the previous week and this week. The spreads are turning well positive. This difference is narrowing rapidly. It'll probably take another month to give us a decent buy signal for risk on. The other thing that we have to look at, and you should be looking at everything every day really, is the deviations chart. You can see how close we are now, if I maximize this, to the in SPY to the 2 times standard deviation. And you can see over here that every time it has even touched it or gone a little bit through it, it's always had a quite sizable pullback of it, about a couple of %. So that level comes in just over 289 for the SPY. So you can actually see that we are very close to go to a period of at least sideways, which is exactly what we want. It'll give time for the moving averages to catch up, which I've just shown you, and then we will be able to do a quick spurt higher. If you have a look at XLB as a sector, materials, you see that it went into the 2 times. That is far more volatile, so it does do it sometimes, as you can see. This is going to be a bad laggard. XLB, do not buy. It is likely to come back or at least go sideways for a very long time. Not what you want to be buying at this very moment in time. This is XLK, and you should also be careful of that because it's very close. It all needs time. It all needs to stop people out and then they get to chase it again. But all the levels are here, the 2 standard deviations. As you can see, every time it's traded through it, it's actually come right back. So that is at 76.64. Have a look at it next week. So don't buy things which are in the red or very close to the red. You will get better opportunities. The deviations tab is there for you to use every day. It's updated every day, and it gives you a very good idea of what and when to buy it. The Bund is still in a downtrend, which is quite obvious. Now, the swing level is 0.77, let's call it 0.8 basis points. Any daily close above that and we could go quite a long way, but I certainly don't expect it. I expect the 5 or 6 basis points level to cap it for at some stage another retest around this area, which is around 0.9 negative or 0.10 negative. I think it's going to stay in this range. I think there is no reason to expect the Bund to go higher, and therefore that is actually going to dictate more or less our view for the 10-year note as well. Once again, absolutely no change in the relationship between the Bunds and the 10-year notes. You can see that we are still in this channel, minus 245, minus 258, 259. What do you want to do? This is incredibly tight, and I think this is the way that the central banks are managing the dollar. it is almost impossible for the dollar to make a large move unless we break this range. But since we've been in this range for such a long time, once we do break it, it could be very violent. We have our levels in the DXY and we have our levels in this relationship. When this spread changes and it coincides with one of those triggers in DXY, which I'll show you later, we will know exactly what to do. For the time being, nothing to do in the dollar for another week. Well, last week I said 255 for the 10-year note. This is a yield chart of the 10-year note, and it got to 254.2. You know, this was my objective of the 10-year note here at 233, stopped just shy of 255. It is basically now going to range trade. I would have thought this 255 level is going to be very difficult to break on the upside. I would have thought 255 to around 242, a very tight range for a few days, possibly a couple of weeks, and then we see. There is absolutely no reason to do anything because the Bund is telling us that unless it breaks that 8 basis points which I showed you, it's still in a downtrend, and therefore the 10-year note will continue to be in a downtrend. If the Bund leads, the 10-year note will follow, and we will probably, I mean, my favorite is that we test these levels all the way down to 229. That to me is going to be about as far as we can go for the next several weeks. This is a chart of the 5-year note, and I haven't changed these levels for months. You can see how well it respects this 235 level in terms of yield. It has been, you know, as soon as we broke through it, we went to the next level, which is 213. We retested it now today, Friday, and we're probably coming back down towards the 220 level. Much the same as the 10-year note, but the 5-year note tends to respect these levels even better than the 10-year note and tends to get there and touch them. So to me at the moment, if we see 218, we definitely do not want to be long of futures in the 5-year note, but the trend is still down. For the next several days, we will trade 218 to 235. These levels have been here for months. You can copy them all down, and those are the significant levels that, if broken, we tend to trade to quite rapidly. In the SPX, well, we broke my important level, the 2864 level, and we closed at the highs of the week. That tends to argue that the next several weeks are going to be to the sign of the upside, with 2864 being the level that it should not break back under, certainly not on a closing weekly level. I think at some stage fairly soon we'll have a thrust higher, but the market basically needs another at least a couple of weeks of sideways action with this 2864 level acting as support before it's ready to make a move higher towards the 3000 level. It needs time to open up the Bollinger Bands both on the weeklies but also very importantly on the dailies and the hourlies, because they're very tightly bunched, and as I showed you earlier, we have the 2 times red zone coming in on the dailies very close to here, and that is why the market is actually saying that it just has no impulsion at these levels. And the title of this presentation is that we have very little oxygen at these levels. You can see what is happening, and now I'll show you fundamentally where we are, so you understand why the market really cannot do that much better on the upside. And here we are. If we have a look, we're very close we're now at 2900. We're getting very close to this times 17 Blue Angel, which is somewhere around the 2930 level. Every time it's got to 17 times, or even close, the market has basically gone sideways, and that is what I expect here. I expect a simulation of this kind of behavior. Up a little bit, down less, up a little bit, down less. 28.64 now should be a very important level to hold it. If we go through it, I will show you now what's going to happen. This is an enlarged daily chart of the SPX. You can see the supporting moving averages come in above 28.64, and you can see that the top Bollinger Band is right where we stopped today. So therefore, if the market were to take out these moving averages, it will cascade down to 28.31, 28.30, this where the support of this very important red moving average is. I don't really expect that to happen next week, but you've been warned that these moving averages now, if they're taken out, I would have thought that 28.64 is probably not going to hold it on a closing basis. We come down here, and that is where the very good risk reward to buy is. The other reason why I don't think we go up very much is because NQ is almost exhausted. NQ, as I showed you, and XLK are just about touching the red zone in the deviations. You should use those every day and have a look where various sectors are. It has very little upside, very little indeed, before some sort of a pullback. We all know that NQ loves those violent pullbacks from very overbought areas, and therefore overall I don't think that NQ can lead, so technology cannot lead, and if the technology doesn't lead, SPX tends to do not very much to the upside, because if the largest sector can't hack it, then the others are not going to be able to do that much. The one sector that could provide some return is actually the Russell. It has closed right at the highs for the week, and it's closed for the first time above the 200-day moving average. After a couple of days of hesitation, I would not be surprised to see it do another leg higher, possibly, all the way up to 1700. I would much prefer to have call longs in Russell than I would in the SPX at the moment. I think the chances are that Russell could outperform for the next several weeks. It has been very patient. It's done a lovely ABC retracement. It would not surprise now if it takes out these highs, which are around this area of 1596, and then takes out the high at 1602. We should have a very quick move to at least 1650 to 1654. Well, VIX is very much in a short-term downtrend. You can see if I enlarge this chart, this is a daily chart of the VIX. If I enlarge it, you'll be able to see how actually it is quite a long way from the bottom of the Bollinger Band. I would not be surprised to see it trade 12 next week. Not because the market is going to go up very much, not because SPX is going to go up very much, but because the market is going to be so quiet. If we get say 10 trading days of price action between 28.64 and 29.30, going up, down, up, down, up, down, and nowhere very much within basically 1% of each closing week, it would not really surprise to see the VIX down at 12 or even a little bit lower. We have that level that I showed you before, which is the one that I want to see, this gap fill here at 1160, 1170. That would be lovely and ideal. I would so much love to have long-term long option longs in volatility at that level. A very interesting market is actually DAX. this is a cash chart of DAX, and if you have a look at the retracement, I mean, the DAX should be the weakest. It is a long way away from the highs, and therefore is being the weakest. But in the past 7 days or so, it's done a real spurt higher. 12,066 is a very important level because it's the 0.618 retracement of this whole move down, and it's also, you can see these these lows, and you can see there's a little gap here just above it. Let's call it 12,100. If the market goes up to 12,100 over the course of the next couple of days and cannot go any higher, then I would have thought the DAX is going to come back and retest this very important level, which is going to be 11,740. From 11,740, the odds are that we go back up. If we cannot close below 11,740 when we test it, the market is very strong, and you want to be long of DAX as well for another leg, which could go all the way to 12,500, 12,800. But I would have thought the odds at the moment are that from 12,066 or 12,100, I don't know what this closing basis is, it's, yes, 12,100, that is the level that one buys some more puts and then retests the 11,740 level. Would love to see that sometime during the course of next week. Another market which is coming to very important resistance is EEM. The 50% retracement is here at 44.83. You see we have that spike low here, and we have this area that we never broke up through back in July and August of last year. So 44.83, when we get there, I would have thought we get there the first few days of next week, would be a very good area to buy some put spreads in EEM, because we really should at some stage come back down towards this 43.12 and then probably go again. But certainly the first move should be one of not being able to withstand the 45 handle when we are up here at the 50% retracement. From a weekly perspective in EM, here you have this line which I've had here for a long time, 45.04. I've had it for years. 45.04 is my swing level in EM. You can see this is a weekly chart. If next week we get to 45.04, I'm a heavy buyer of put spreads for a retest, certainly down towards the 43 level. And our good old friend, the dollar, that has been in this range forever, it feels like, basically 97.54, 93.63. I am going to respect a weekly close of 97.54. I am going to buy calls because the dollar is very well bid. Every time it gets anywhere close to the 200-day moving average, it bounces off it like, like nobody's business. That to me tells me that, I still think the market is range bound, and I think eventually Trump will find an excuse to get it to go lower, because that's the only way he can keep up SPY in the long term, and the manufacturing sector that he is so interested in. But in the short term, I will definitely respect a break of 97.54. If we have a look at what actually that means in the longer term picture, you can see how 97.54 has always been a very important level. It hasn't really closed much above it without some consequences. Maybe this level here, 97.87, but certainly a weekly close above 97.54, I buy some calls, and above 97.87, I buy a lot more calls. It's just not worth not participating at that stage because the odds are so good. If we are in this kind of trend, you'll see how much we have. We can easily get to par 100, and therefore why not participate, even though the Bund against the 10-year note has not broken the range. If it does break the range, well, then we are going to skyrocket. And here we are. I'm a better buyer of 10-year notes. That is my bias. I still think it trades between 255 and 242. I prefer the 5-year note to the 10-year note. I think there's far less danger, but you know, they're pretty much equivalent. I told you what I think about the Bund. I'm still bullish unless it takes out 8 basis points. Above 8 basis points, something has changed and we want to be out of any long Bund positions, but we want to initiate positions as close to 8 basis points as possible next week. Rallies here will be shallow in SPX. Now we are caught between the 2900 handle. Could it go to 2910? Sure. Could it go to 2920? Yeah. You know, it's unlikely. And this 2864 level in SPX. Basically what we are looking for is time to pass, and I do mean time, at least 2 weeks trapped in narrow ranges before we make a decent sized move, which by then should be the upside which has opened up. NQ, as I told you, I think is now completely exhausted, and there's not a lot of point in looking for any help from NQ. And VX, I've left that 1150 on deck, 1150, 1160. That is the level that we are still aiming for, and the market should top once we get to this 1150, 1160 area. I've told you what I think here, 12,060 to 12,100, as I showed you, that is the level. And if it doesn't go down from there, if it starts closing once or twice above it, then something is going on, and it's more bullish than I think, and therefore we need to basically follow it, because if the DAX, which should be the weakest, is that strong, then I'm probably wrong on this SPX being bounded by 2900-ish and 2910 and 2920. It could accelerate in a stupid fashion, probably completely unsustainable, but it's a warning sign. If DAX starts going stupid, then expect SPX to start going pretty silly on the upside too. And for the dollar, as I said, we have all our levels, but you have to respect the weekly close above 97.54 and buy some calls. If that is followed by the market breaking the Bund 10-year note relationship, then you really have to get very long of the dollar, because we're going to have a 2-3% move in double quick time. Thank you very much indeed, and tweet you on Monday.